Hello, good morning, ladies and gentlemen. It's the end of the trading week. Happy Friday to everyone. Let's quickly confirm that we are good to go this morning. So, if you can see my screen and you can hear my voice clearly, type in hi in the comment section so that we can get this session started. So I want to see some feedbacks in the comment section so that I can get an assurance that we are good to go this morning. All right, so let's see what we have here. It's 061. Good morning to you. Thank you very much. 636. Good morning. Thank you. Hey Vivi, how are you? Good morning to you too. Raven Crow. Good morning. Thank you. Another profit day. Yeah, thank you very much. Glad to have you around too as well. Okay, hey Carrie. Thank you, Carrie. Good morning. Melissa, good morning to you. Okay, Vaxe. All right, thank you very much. I think we are having a very positive response this morning. I would like to take this as a confirmation that we are good to go this morning. So with that being said here, I am so pleased to welcome you to another promising session on the X Trend Speed Live. My name is Sheriff Daramola, and as usual, I will be your host for the next 1 hour, where we shall be evaluating the financial market using technical parameters to identify trading opportunities lining up for us today. And today, since today is going to be the last trading day of the week, we definitely want to be doing some rounding off today, securing our current position and anticipating a potential reversal in the prior leading price action. Well, it's important I state here that Fridays are always in the opposite of the main direction, as most people will definitely want to be doing some profit taking activities after taking either a long or sell position during the week. And as a result of this profit taking activities, we shall be seeing the reflection here on the chart as price moving in the opposite direction of wherever it has been since the beginning of the week. So we are going to be looking at structures in that regard. Try to secure our positions. I will be giving you advices on how to do that, and at the same time get prepared for the New York session today as well. And for those who are joining us for the first time, you are indeed welcome on board. I'm so glad to have you around with us. And one thing we simply do here on a daily basis is to gather here as a family, review the financial market, take our positions for the day, and identify how to take advantage of any trading opportunity during the New York session today. Initially, it might look a little bit complicated, but I would advise you that you should stay tuned, be patient, stay tuned in, watch along with us, and continue to be part of the session on a daily basis. And I assure you, with time, you will get to understand how this works, and you will be able to take your independent decision using the information you have gathered here. So we do this on a daily basis, 10 a.m. UTC. So I implore you to stay tuned in and continue to be part of the session on subsequent days. So once again, you are welcome on board. So with that being said, let's dive into the market. And as usual, the first thing we normally do before diving into the current market structure is to look at the economic calendar to identify possible macroeconomic events to look out for. And you all know, despite our technical parameters or technical structures and technical understanding about the market, we need liquidity to bring price movement in the direction that we have positioned ourselves for. And as a result of this, macroeconomic events are serving as a catalyst to help us move price action in whatever direction we are planning. So as a result of this, we are looking at the economic calendar right now, and based on the financial instrument that we have been monitoring so far this week, we only have one single macroeconomic event, which is the almighty non-farm payroll. Obviously, everyone in the market is looking forward to this event, and from the look of things here, if we look at the previous data came in at a whooping 517,000, and we have a consensus projecting about 205,000 increase for the month of February. So we are going to be looking forward to see what our expectation is going to be like. So will the actual data come in beyond expectation, or below expectation, or just as expected? And obviously I'm suspecting that these figures might likely come in beyond expectation. And following the strong economic data coming in from the US recently, we might likely see this improvement for last month. And following also what the Fed chairman's testification during the House of Congress on Tuesday and Wednesday, his hawkish outlook seems everyone will be looking forward to this event to see how he's going to be reacting to whatever data comes in today. And you all know what he said. He said if they continue strong data continue to come in, definitely there will be no choice than for a rate hike to happen. So we are going to be looking forward to this event today. So let's dive into the current market structure to be able to decipher what participants are actually thinking in anticipation of this event. So with that being said here, let's dive into the current market structure to determine what we want to be doing for today. So as usual, the first commodity we are going to be looking at this morning is the US oil. And on the US oil here, in the last 20 hours now, price action has been bearish. So let's quickly run through how the week has started for us here on the US oil. So if you look at the current market structure here, it is quite obvious that price action has been bearish for this week. Though at the beginning of the week, we had a situation where we had a buy position initially after we identified this flat channel between the $79.40 area and the $79 area. And what happened in that kind of situation? Whenever we see this kind of situation, what we normally look out for is either a breakout of the channel for trade buy opportunity or a breakdown of the channel for selling opportunity. And in fact, at the beginning of the week, we saw price action did the breakdown of the structure with the hopes that price action will continue to the downside. However, this was negated as buy pressure resumed, taking us out of all sell positions at a worst case scenario of break even. And what happened subsequently was quite interesting, as we saw our buy stop order above the resistance level at the $79.40 level triggered. And in fact, we had a couple of positions here, as we also added another position at the breakout of the $80 level. And what we saw here, we saw our price move significantly in our favor with over 200 pips in profit on two positions. And on Tuesday morning, we were able to identify this flat channel between the $81 area and the $80.40. So this was a signal that there was an indecision in this market. Probably participants were waiting for a major catalyst to drive price movement. And following the Fed's hawkish comment on Tuesday, we started seeing a sharp decline in the situation. And one thing we said on that Tuesday is that we shall be using this bullish trend line as our yardstick for trading activity. As long as price remain above the bullish trend line, we shall remain bullish. And if price action drops below that structure, then we shall be anticipating a sell position by placing our sell stop order below the $80 level. And what we saw on Tuesday was interesting here, as we saw price action break down the bullish trend line for the first time in 3 days, retest of structure around the $80.40 level, and boom, price action triggered our sell stop order, and price action continued to ride to the downside. So we had price hit our TP target at the $77.50 level. So we had two positions running, as we added another one at the breakdown of the $79 area. So we had about 250 pips on our first position and 140 pips on our second position. And since then, price action has been tending towards the downside here. And if you remember, on Wednesday morning, or during our live session on Wednesday, we also identified a little consolidation phase between the $77.80 level and the $77.20 area, where we said A breakdown of that structure will definitely be signaling another sell position in this market. So we saw price action break down, retest the $77.20 level. Price action moved to the downside, and it was at this point during the live session yesterday I told us all to secure all sell positions as we move our stop loss to somewhere right around the $77.20 area. And the reason why we did this was simply because of the buy pressure we started witnessing around the $76.50 level, giving us a temporary demand zone in the meantime, where we said we shall be using the bearish trend line here to guide our trading activity for yesterday. And what we said yesterday, what we agreed here in the live session, is that if price action breaks down, reaches the $76.50 level, we shall be looking out for selling opportunities. However, if price action breaks out of the bearish trend line, we shall definitely be looking out for buying opportunity. And this was exactly what happened. We saw price action break out, retest the trend line, and this triggered our buy stop order as price action moved about 130 pips in our direction before those bearish momentum kicked in this market. Personally, I missed this bearish momentum because I didn't expect that price action would drop that massive, as I was looking forward to price action probably coming back to do some retest of structure to incite another wave to the upside. So I missed that bearish momentum to the downside. And for those who are taking advantage of this bearish momentum, well done to you guys. Kudos to you for being on standby to have caught that move, as you would have made over 200 pips on that single impulsive move to the downside. Now, for us, people like us who have not taken advantage of that move, we just want to wait out and see how price action will be reacting to this current structure to decide what our next line of action will be. And for those who are still in the sell position, if you are taking advantage of that move, my advice at this point is that you want to be securing your current position. Remember, today is the last trading day of the week, and there is a likelihood that price action will be going in the opposite direction of where price has been. So ensure you secure your position, and I think from the current structure here that the $75.70 area seems most appropriate to secure your position. And the reason why I have chosen the $75.70 area is simply because it is right above this bearish trend line, so that we can give some room for price action to breathe if there is going to be a trend continuation to the downside. Now, with that being said here, and with a significant breakdown of the $76 level, what is going to be our plans for today? Well, the first thing I would like to say here is that it is important we have an holistic point of view here by scaling up to our daily time frame to look at things from a larger perspective. But before we go into the daily time frame, I want to quickly let you know and emphasize the importance of this current structure that started this week. Now, if I zoom out and you look at the current structure we have here, to further buttress the bearish momentum in this market since the beginning of the week, you would have noticed that price action has transitioned into an ascending channel, which has further emphasized the strength of the sellers in this particular market. So after connecting the series of lower highs, which happens to be the resistant line of the ascending channel, and connecting the series of lower lows, which happens to be the support line of this channel, we have a beautiful descending channel. So right now, what are we going to be looking out for? Is this channel going to be respected? As you can see, price action appears to be doing some consolidation phase just around the support line of that descending channel. So are we going to be seeing a situation where price will continue to the upside here, respecting that support line for the fourth time to incite a bullish momentum, probably into the resistance point? Or are we going to be having a breakdown of that support line of the descending channel to incite another wave of bearish momentum? So these are the things we are going to be looking at, but I want us to quickly have an holistic view here. And for the sake of those who are not part of the live session at the beginning of the week, they can also be on the same page with us as they get to understand what has been driving our decision in this market. Now, scaling up into the daily time frame here, at the beginning of the week, we were able to identify the simple structure here on the daily time frame, and what we saw was the fact that price has been bearish at least throughout the second half of last year. And when we take a closer look at the structure connecting the series of lower highs, what do you see here? We have identified a bearish trend line which has consistently guided this bearish momentum to the downside. And something interesting happened during the last quarter of last year, as we saw our price action fell within a consolidation phase within the $83 level, which was serving as the supply zone of the channel, and the $70 area, which was serving as the support line of the channel. Now, with the situation of things now looking at the lowest point price has ever been, that is the $70 area in the last 1 year, we can see that price was unable to break the previous low, hereby giving us a higher low in that regard. And when we connect the series of higher lows here, what do you see? We have a beautiful bullish trend line which emphasizes how much the buyers are trying as much as possible to break out of this current structure. But the strength of the sellers has been so strong that every attempt by the buyers has been negated at between the $83 level and the $80 area. And during the course of this week, we have seen this bearish momentum to the downside, which we were lucky enough to be part of this position. And right now, price action broke down the $76 level yesterday, which was our key level for this week. And we are seeing a situation right now where price is approaching that bullish trend line that was identified earlier. So now at this point in time, if I zoom into this current structure, we really do need to see what is really going on around here to make a decision for today. So is price action going to respect that trend line to incite another wave to the upside? Well, if that is going to be the case, then we want to be seeing some buying pressure around this area, probably a reversal pattern on our lower time frame to give us that confirmation and confidence to join a potential rally to the upside. However, if any consolidation phase around here transitions into probably a trend continuation pattern on our lower time frame, leading to the breakdown of that trend line, which will happen to be the first time the trend line will be broken in the last 5 months, then that will be a signal that sellers might likely be bringing price back into the demand zone or even breaking further down below the demand zone. So these are the things we are going to be looking at today. So in order to have a better perspective into what is going on here, we shall be taking a microscopic look at the area at around the $75 level to decide what our next line of action will be. So we shall be scaling down to the 1 hour time frame so that we can see how participants in the market has been reacting to the $75 area. Now, when you scale down to the 1 hour time frame, and then following the impulsive move that we have been witnessing here since the beginning of the week, as you all know, we acknowledge the fact that price has been bearish since the beginning of the week, hereby breaking down that key level, important key level we identified at the $76 area. So right now we have a situation here where price action appeared to have been consolidating since the early hours of today. Now we have a channel here between the $75.35 level and the $75 area. Now this is the $75 area we identified on the daily time frame, and as you can see here, in the last 4 to 5 hours we have been witnessing buy pressure, buyers negating all attempts by the sellers to break down that structure. So we might likely see a situation where price might respect this support line of that descending channel we identified earlier to incite another wave of bullish momentum. Now the question is, how far will this bullish momentum go if we are going to be seeing the scenario here? Well, we can't tell for now, but one thing for sure is that as soon as we have this opportunity to join a buy opportunity here, we'll definitely want to be securing our position by moving our stop loss accordingly to secure this position. And we already have structures which we can use to guide that, as we have the $76 area here, where since we already have a breakdown of that structure, we might likely see some selling pressure below this level to incite another wave to the downside. And if a breakout of that structure happens with buy pressure above that level, then definitely this will be a good confirmation for us to join a rally to the upside. Now, before I go into more details here, the 1 hour time frame doesn't seem okay enough for us to see what is really going on within this channel. So in that regard, let's scale down to a much more lower time frame, like the 15 minutes time frame. Now on the 15 minutes time frame, we begin to see things more clearly here. We begin to see the structure more clearly, as you can see here. So if we zoom this out a little further, you can see we have that structure here. So we have the support line at the $75 level, which we already acknowledged on the daily time frame, and we have the resistance line here where sellers has continued to negate all attempt by the buyers to break out of that structure. And one thing we have seen here in the last 1 hour, we saw a little breakout of the $75.35 level, which happens to be the first time price action will be breaking out of that resistance level in the last 4 hours. So with this situation here, will this turn out to be a beautiful signal to join a bullish momentum here? Well, if we go to as far back as and how I go, you will see sharp rejection of the $75 level, which further buttresses the strength of the buyers. And this had led to the breakout of the $75.35 level. I am of the opinion that we might be seeing a bullish momentum at this point. And in that regard, we should be having a buy stop order sitting right above the $75.35 level, with the hopes that price action will be breaking through that area to trigger our position. And for you to secure that position and mitigate your risk on your portfolio, I will be advising you to have your stop loss somewhere right below the $75 level, which will be giving you about a 45 pip stop loss in that regard. So that is how we want to be buying the US oil as we head into the New York session today. Now, talking about selling the US oil, that is a trend continuation of what is going on in this market. Well, the only reason that will make me to sell the US oil from this current structure is to see price action break down the support line. And remember, we have a support line at the $75 level, so I want to see price action take out all the buy positions here to give us a beautiful signal that we want to be going bearish. And if we are lucky enough, we start seeing some liquidity around that area, which will reflect on the chart as multiple rejection of that structure, which will be characterized by selling pressure around that area, which definitely will be giving us further confirmation to add more position to our existing trade. So the only reason why we are going to be selling, the only structure, the only movement we want to be seeing that will support a bearish momentum from this current structure is a breakdown of the $75 area. So with this situation set here, it's obvious that we have a simple setup. So we have a buy stop order right above the $75.35 level. Once we have that, we have our stop loss right below the structure. Let's see how far this bullish momentum will go. And if it so happens that we have our sell stop order triggered here, then ensure that your stop loss is somewhere right above the $75.35 level to mitigate the risk on your portfolio. So that is that on the US oil. If you have any questions, feel free to drop your inquiries in the comment section. And for those who are taking advantage of the selling opportunity yesterday, please ensure that you have moved your stop loss accordingly, as the market structure around here has a high tendency of transitioning into a reversal pattern that will be inciting a bullish momentum anytime soon. So on the US oil, I'm leaning towards a bullish momentum, but let's keep our mind open for the possibilities of a breakdown of the $75 level. So that is that on the US oil. If you have questions, feel free to drop your inquiries in the comment section. All right, so with that being said here, I will be moving on to the next pair. And the next pair we shall be looking at this morning is the US tech. So on the US tech, what has been happening in this market? How have we been trading this market since the beginning of this week? Well, let's zoom out so that we can see things more clearly on this current market structure. So the beginning of the week started with a consolidation phase, remember, as we spotted the resistance level for the week at the 12,350 level here. and then we had a support line for the week sitting at around the 12,260. So it was a consolidation phase actually, and we were looking out for either a breakout or breakdown of the channel to give us a trading opportunity. And what we saw during the later part of the New York session was the breakout of the 12,350, which triggered our buy position. And in fact, price action moved about 110 pips thereabout before this bearish momentum came in, taking us out of our position with some small profits. Now, since the selling pressure resumed here, we saw a huge consolidation phase happen between the 12,350 and the 12,315. And during the live session on Tuesday, this is what we saw based on that current structure. Now, when we took into consideration the impulsive move that led into price action coming into the 12,350, we saw some rejection around that area. We noticed selling pressure. We noticed attempt by the sellers to negate our bullish momentum there. And we were able to see this reversal pattern evolve. The head and shoulder pattern. This is the left shoulder, the head. Then we add the right shoulder here. And you all know what we look out for whenever we have this kind of structure. We want to be having a neckline which shall definitely be guiding our trading activity. And when we look at the current structure here, we saw that the bullish trend line that was guiding bullish momentum since the beginning of the week fall exactly at an area we can call the neckline of that structure. And with a neckline formed, we'd want to see price action break down the neckline to give us a confirmation that the reversal pattern here is now valid. And in fact, as a result of this, we identified the 12,315 level, where we placed our sell stop right below the structure with the hopes that price action will break down that level. And look at what happened here on Tuesday's New York session. We saw price action drop significantly well in our favor, as we saw price move about, let's see, how many pips was that? 180 pips before we started seeing this huge indecision in this market. Now, during the live session yesterday, we were able to identify this, and we said we shall be using both the bearish trend line, which has been supporting bearish momentum since the beginning of the week, and the 12,130 level as a yardstick for trading activity. And how did we say we are going to be using the structure? Well, we said we are going to be selling if price action breaks down to 12,130, taking out all the buy positions here. That would be a good signal for us to sell. And if price action breaks out of the bearish trend line, then definitely we want to be looking out for buying opportunity. And in fact, we have the breakout of the trend line. Remember, I told you yesterday we should be having a buy stop order above the 12,200, and we got that buy stop order triggered as price action moved about 140 pips in our direction before this bearish momentum started. And one thing about this momentum that started here, I actually missed it. The reason why I missed it was simply because I was expecting, based on the current technical structures, that price action might likely come back to retest the structure in anticipation of another wave of bullish momentum. And so because of this expectation, I didn't join. But with a sell stop order below the 12,130, as we all have placed during the live session yesterday, we had the position triggered, and since then price action has moved about 190 pips in our direction, approximately 200 thereabout, before those retracement back into the $12,000 level. And for those who have been part of this position here, well done to you guys. Kudos to you for being on standby. And at this point in time, what is going to be our next line of action? Well, for those who are already in this sell position, the first thing I'll be saying right here is that we want to be moving our stop loss to secure this current position by moving our stop loss to somewhere right around the $12,050 area. Let's give room for price action to breathe, with the hopes that price action might likely do some retracement back, falling back below the 12,000 level to incite another wave of bearish momentum. Now, I want us to note here that with the current structure here, the bearish trend line we have here is still valid, and it shall be helpful for us during the New York session today. And how do we intend to use this bearish trend line? as a yardstick for trading activity? Well, since it's a bearish trend line, we want to be moving our stop loss to secure this current position by moving our stop loss to somewhere right around the $12,050 area. Let's give room for price action to breathe, with the hopes that price action might likely do some retracement back, falling back below the 12,000 level to incite another wave of bearish momentum. And so because of this expectation, I didn't join. But with So we need price action to continue to trade below this trend line for us to feel comfortable in our current sell position. And if the contrary happens, where price action breaks out of the neck of that trend line, then definitely this might be a signal that we might be going bullish. And remember, we are not getting too excited at the breakout of that structure. We need further confirmations to happen so that we can join that rally to the upside. And the confirmation is likely going to be coming in the form of a retest of that trend line, a possible bullish pressure above the structure on our lower time frame, after which we can join that bullish momentum to the upside. So what this simply means is that as long as price remains below the trend line, we shall feel comfortable in the sell position. Now, with the situation of things right now, price is currently trading around the $12,000 area, which is a strong psychological level in this market. And in fact, this level also has been a major determinant of price action in the past. And I would like to share with you the importance of this structure. So we want to scale up to the daily time frame so that I can let you see how important the $12,000 level is, after which we shall be coming back to the lower time frame. Now, going back to the daily time frame here, let's quickly look at this. So on the daily time frame, we have the $12,000 area here. This is the $12,000 level. Okay, let's extend this out a little bit. All right. And if you look at the $12,000 area and look at what has been happening around the structure here in the past, if we go to as far back as the month of September last year, you will see how that level has been a strong selling niche. Look at what happened here. In the month of November, we saw how that area was a strong selling niche. Then during the mid-month of December as well, we saw how that area was also serving as a strong selling niche in this market. So every attempt by the buyers to break out of the structure has been met with strong resistance from the sellers. And this lasted for about 2 to 3 months before the final breakout of the structure happened at the beginning of the last month, as we saw the final breakout of the $12,000 area. And as you can see, price action came back to reject that area to give us some buying opportunity back into the structure. Now, if you recall what we talked about on this current structure here, the reversal pattern that was cited here, let's do a visual representation of that. So you can see we had a double top structure where the $12,300 level was serving as a neckline of that reversal pattern. And what we saw here was the breakdown of both the neckline area and the bullish trend line that has been supporting that bullish momentum since the beginning of the year. And from a technical standpoint, whenever we have a breakdown of structure, there is a likelihood that price action will be coming back to do a retest of that level, which actually fell within our technical expectation during the week, and we were lucky enough to be part of that position as price action moved to the downside. So with this reversal pattern cited here, are we going to be seeing this retracement continue all the way down into the $11,000 area? You all know that that area also shares a confluence with the bearish trend line that was broken at the beginning of the month of February. So we might likely see price action come back to retest the structure. But before thinking of a TP target around this area, we need to first of all get through this phase here, which is right around the $12,000 area, a very significant level in the past. So we want to see how price action will really be reacting to the $12,000 area to decide if we are going to be joining that bearish momentum to the downside, or we might likely see a situation where price action will transition into a double bottom structure to incite a trend continuation to the upside. So with this information we have here right now, you can now see the importance of the $12,000 level. So in that regard, let's scale back down to the 1 hour time frame and let's see if we can find a trend continuation pattern around this area so that we can add more position to our sell position. So in that regard, we shall be scaling back down to the 1 hour time frame, and right on the 1 hour time frame, let's go back to what we saw here on the 1 hour time frame. So right now we are at the $12,000 level. As you can see, in the last 2 hours, price action has been trading around the $12,000 area, and we have been seeing some rejection of that structure, which might likely incite a bearish momentum in that regard. So at this point in time, we really don't have a mature structure that will be guiding a bearish momentum here. So in order to have a clue into what is really happening, I would like us to scale down to a much more lower time frame. And if we do that, let's scale down to the 15 minutes time frame. Now, if you look at the 15 minutes time frame here, you will notice that as soon as price got into the $11,920 area, we started seeing buy pressure resume in this market. Now with this buy pressure here, let's see 11,925. Let's label this. Hold on a second for the sake of clarity. 11,925, right? Okay, so we have 11,925. Now we have been seeing buy pressure from this area, bringing price back into that key level at 12,100. So that is a sign that there's some buy pressure around that area. So I want us to be connecting the series of higher lows here to probably give us a temporary bullish trend line, which we shall be using in conjunction with the $12,000 area as a yardstick for trading activity for today. So when we connect the series of higher lows here, we have this bullish trend line here. Now bring back our candle chart, do some readjustment, and boom, we have something like this. Now if the sell pressure below the $12,000 level continues, then we want to see a breach of that bullish trend line to give us a signal that the trend continuation we have been enjoying since the beginning of the week is likely going to be continuing to the downside. And to further help us to be able to catch that move, it's important that we have a support line that we'll be using to guide trading activity for today. So this only makes our job easier during the New York session, as we want to see. Okay, so we have the 11,980. So 11,980 level. Okay, so this is what we have right now. So it only makes our job easier in order to be able to join this momentum to the downside. So what we want to be seeing right now to join a sell position or add more position, if you are still in this sell position, is to see price action break down both the trend line and the 11,980 level, followed by selling pressure here on our lower time frame to give us a confirmation of joining that decline to the downside. And if this continues, price action breaks down our 11,925 level, then definitely we want to be adding more position at the breakdown of that structure. So this is what we are going to be looking out for going into the New York session today for selling opportunities in this market. However, if the bullish momentum continues here in such a way that it breaks out of the 12,000 level, well, we are not doing anything. Remember, we have secured this current position by moving our stop loss accordingly. We want to remain patient and watch this price move all the way into the trend line and wait out to see how price action react to that structure, which will determine if we are going to be buying or selling the US tech. So if it happens that price action breaks out of that trend line, then definitely that will be a signal that we are going bullish in this market. Then we look out for buying pressure above that trend line, above that bearish trend line, which might likely share a confluence with this bullish trend line that we just identified here. So if we extend that out a little bit, a breakout of both the trend line here and the retest of the bullish trend line will be a beautiful opportunity to join that rally to the upside. So this is the only thing we want to be looking forward to buy the US tech. All right. So I hope I made myself clear there. If you have questions, feel free to drop your inquiries in the comment section while I move on to the next pair. So the next pair we shall be looking at this morning is the GBPUSD. And on the GBPUSD, we have been quite profitable so far this week. We have been able to take some bearish opportunity which has given us a lot of profit, and we have also took advantage of some buying opportunity as well in the last couple of days, which has also given us some positive reward. Now let's quickly run through how the week started for us here on the US oil. So I would like to make this chart a little bit cleaner here by deleting some of these structures that I no longer need here, so that we can have a clean chart at this point. Okay, all right, we don't need this anymore. All right, okay, so the week started around the 1.20500 level here. We saw a little consolidation phase between the structures here before we saw the breakdown of this level to give us a signal of a possible bearish momentum. However, we were taking into consideration this bullish trend line. As you can see, since Thursday last week, we saw how buyers continue to push price to the upside. But as soon as price got into the 1.20500 level, we saw that there are a lot of sellers at this place, as every attempt by the buyers to break out of that structure has been negated by the sellers at every point in time. And during the live session here on Tuesday morning, we anticipated that if this bullish trend line is breached to the downside, then we will be getting ready to join that decline. And I told you how we want to see a breakdown of structure, retest of this level on our lower time frame, which was exactly what happened, and we saw our sell stop order below the 1.20250 triggered. And since then, price action dropped significantly well into the 1.181 area to give us about 220 pips in profit on that one. Then we also had another position at the breakdown retest of the 1.200 level, which also gave us about 190 pips thereabout. Now in the last 48-72 hours, we noticed how price action was caught within a channel just within the 1.1840 level and the 1.18100 area. And remember what we said on Tuesday, Wednesday, we said we shall be looking forward to either a breakout of that channel or a breakdown of that channel for a trading opportunity. And in addition to that structure was this beautiful bullish trend line that we identified, which laid much emphasis on the bullish momentum behind the scenes in this market. And what we saw here on Wednesday was quite interesting. We saw the breakout retest of the 1.18400 level, which triggered our buy position, and price action continued to the upside, breaking out of the 1.1850 level to trigger another position. And since then, we have been enjoying this bullish momentum all into this area. Now recall yesterday we identified our TP target for buying opportunity here, and as you can see, price action has actually hit our TP target here. So depending on whichever place you place your TP target, you must have closed your profit at this point. Remember, we had our TP target zone fall within the 1.19150 and the 1.200 area, and it appears price has exhausted that zone out. And so kudos to everyone who has been part of this trade, as you would have had a minimum of about 85 pips to a maximum of about 170 pips on this GBPUSD right now. Now, as we head into the New York session today, what is going to be our plan? After enjoying this bullish momentum here and a bearish momentum at the beginning of the week, what do we intend to do as we anticipate the NFP for today? Well, since we are already within that TP target zone, which we also identify to be an area to look out for selling opportunity in this market, as you can see here, we did this yesterday. So what we are going to be looking forward to, if I zoom out here and look at what has been happening since the beginning of the week, remember that price was initially caught within the channel here between the 1.20500 level and the 1.200 area. And one thing we saw here on Tuesday was the breakdown retest of that structure here at the 1.20 level. And right now price is back into that structure. So we are at a critical point in the market right now where a retest of that structure has a high chance of inciting another bearish move. And you all know that from a technical standpoint, whenever we have a breakdown like that, A retest of structure is something that we all want to be looking forward to, where a reversal pattern around this area on our lower time frame will definitely be giving us a signal to join the second wave of that bearish momentum to the downside. So we are at a critical point right now, the 1.200 level, where we need to see what is really going on around here to decide what our next line of action will be. And in fact, what we have on the 1 hour time frame here is not yet sufficient enough to make a decision based on this current market structure. In fact, we want to see something like a reversal pattern. It could be a double top structure, and this could take like 3-4 hours before this happens, something like this, before we see this is sign for us to be joining a decline to the downside. And if it happens that price action breaks out of the 1.20 level, well, I'm still not going to be keen on buying even if we have the breakout of that structure. And the reason why I would not be keen on buying is simply because of this 1.20500 level, which has been a strong selling niche in this market since the beginning of the week. So it depends on how price action reacts to the 1.20500 level that will determine if we are going to be selling or buying the GBPUSD at this current market structure. So even if I have a breakout of the 1.200 level, I will hold on to wait and see how price action will be playing out at the 1.20500. However, if you are still in this buy position here, well, you could actually extend your TP into the 1.20500 level and then wait to see how price action will react to the structure, after which if a breakout happens, then you know that, okay, fine, we might see price come back into this level. And if a rejection of this level happens, you must have moved your stop loss to secure the current buy position, so that price action will not take you out at a lesser loss. Now, since we don't have a structure here on the GBPUSD 1 hour time frame, let's see if we can see something around here on a much more lower time frame. And in that regard, I will be scaling down to, let's say, the 15 minutes time frame here. So let's see if we can see anything around here. I would like to delete this TP target zone, as we no longer need that structure there anymore. So this is what we have here on the 15 minutes time frame. It's still not very clear here. I really need to see a lower low at this point in time for me to start thinking of selling the GBPUSD. So we already have a sharp rejection of the 1.21200 level here. We have seen price drop here. We have seen some consolidation phase around here. So I would like to see some breakdown retest of structure here. That is a lower low, lower high kind of setup for me to start getting ready to join this bearish momentum to the downside. And if that continues, a further breakdown of the 1.19150 will be triggering another opportunity to sell. In fact, I already have a sell stop order here which I have not yet deleted, so I'm hoping that we see something like a lower low, lower high kind of setup here to join that bearish momentum to the downside. So let's be vigilant around the structure. We want to see some lower low, lower high structure around this area to be able to have a good confirmation to join a sell momentum in this market. So I hope that we'll be on standby to catch that move when it finally happens. If you have questions, feel free to drop your inquiries in the comment section, please. And I will be moving on to the next pair. So the next pair we shall be looking at this morning is the XAUUSD. Because of time, I will quickly run through this. So the XAUUSD also has been a very profitable trade for us this week. We have sold the XAUUSD during the first phase of this week, and we have bought the XAUUSD in the last couple of days in this week, and both situations we were profitable in that scenario. Now, for the sake of clarity here, let's quickly run through how the week went by for us. Let's reminisce over what happened so far before we now dive into the current market structure. Now, look at the situation we have here on the XAUUSD so far for this week. Remember, at the beginning of the week, we identified a channel. Initially, it was very indecisive in this market, as participants were not yet well informed of where price action might likely be heading for this week. So there was a lot of testing of waters around the 1,857 level and the 1,850, as you can see here. And you all know what we look out for whenever we have this kind of channel. We want to see some confirmations to happen. We want to see some breakout of channel to happen to give us that confirmation that this is where price is likely going to be going for the week. And lucky enough for us, during the live session on Monday, we saw the breakdown of that structure happen before our highs, and we saw multiple rejection of that level later on during the New York session on that day to inform a bearish signal in this market. And since then, we have been selling the XAUUSD, though we had some couple of buy moments which we were taking out of that position immediately, and we saw our price action continue to the downside, breaking down structures like the 1,845, the $1,839 level here, and the 1,820. And on each occasions, we had some position added to our existing position. So on that sell position alone, we were able to make over 5,000 pips in profit on that one. And congrats to everyone who has been part of that profitable trade. Now, later into the midweek of this week, obviously, we saw a situation here where price action was caught within a consolidation phase. So as soon as price tested the $1,810 level, we saw a situation where bullish pressure begin to appear in this market. And to further emphasize the strength of the buyers around the zone, we were able to connect a series of higher lows here, which gave us this bullish trend line, which was initially called a temporary one, but since we have within a strong bearish move. Now, we bought this pair right here on Wednesday, I guess, and we still had that buy position run for about 24 hours, as during the live session yesterday, we were still in that buy position as price continued to trade above the 1,815. And during the live session yesterday, I showed you something here after we zoomed out on this current structure, which was a beautiful signal that a reversal pattern is gradually coming in this market. And when we took this bearish impulsive move into consideration, we saw the first touch here at the 1,810. Price came back into the 1,820. We saw our price was unable to break the previous low, and it was at this point yesterday we anticipated that a breakout of the 1,820 level will be a signal that this reversal pattern is now mature. And you all know we have our neckline here at the $1,820 level, which also shares a beautiful confluence with that important key level we identified on the daily time frame. And with a buy stop order above the $1,820 level, we had another position triggered at that particular point in time. And in total, we have about let's see, the first position was running with about 1,900 pips, and the second position here is running with about 400 pips thereabout. So we have a total of about 4,000 pips on the XAUUSD so far. So if you have been part of this one, kudos to you for being on standby to have been part of this trade. Now, going into the New York session today, the first thing we want to be doing, considering the consolidation phase we have been witnessing so far, we want to be securing the current buy position by moving our stop loss accordingly. And with the look of things here, I want us to be securing the current position somewhere right below the 1,828. Let's give some room for price action to breathe if there's going to be a potential trend continuation to the upside. And look at what has happened here in the last couple of hours. Here we can see our price has been consolidating around this area since yesterday, and this is more or less a sign that buyers are likely losing that momentum that they have gathered at 24 hours ago. So in that regard, there is a likelihood that sellers will be coming in this market. So ensure you have moved your stop loss accordingly to secure this position, as we could be having a sell momentum from this current structure anytime soon. And to further buttress the potential of selling opportunity coming in here, if you look at what has been happening since the beginning of the week, after connecting the series of lower highs here, you can see we have this bearish trend line. And if we extend this trend line further into the future, you can see our price action is currently trading around that trend line, which, as you can see here, we have been witnessing some selling pressure, rejection of that trend line to further confirm that there is a likelihood that sellers could come in anytime soon. And as a result of this, I want to be seeing a breakdown of the $1,831.50 level with selling pressure below that structure to give me a confirmation that I want to be selling the XAUUSD as we anticipate the NFP today. So we might likely see a situation where price will drop below the 1,831.50. Price continues to the downside, takes us out of our position, as this is where our stop loss is for the current buy position, and a further breakdown of the $1,826 level will definitely be triggering another position in this market. So this is what we are going to be looking forward to sell the XAUUSD for today. And if it so happens that price action continues to the upside, breaking out of the $1,839 level, definitely we want to be having a buy position at that point. So for today, I'm tending towards a bearish momentum for today. I'm looking forward to price breaking down the $1,831 level for my selling opportunity to come in this particular market. So let's see how price action plays out in the next couple of hours in that regard. So ensure you have moved your stop loss accordingly. Secure your current position as we continue to monitor price action. If you have questions, feel free to drop your inquiries in the comment section. Now I will be moving on to the last pair for today, which is the USDJPY. On the USDJPY too as well, that has been a positive week for us on the USDJPY, as we had buy opportunities, we had selling opportunities as well, which were quite profitable for us on this pair. Now look at the situation we have here since the beginning of the week. Remember, we were sitting on a strong demand zone at the beginning of the week, which was at around the 135.500 level. It was quite a huge demand zone here, where price has been respecting that level for quite some time. We identified this on the daily time frame, and when we looked at what was happening at the beginning of the week, we saw how price action fell within a channel right above that demand zone. And at that point, I told you how it's more visible for price action to break out of the resistance level of that channel than the breaking down of the support line of that channel. And what we saw here was quite interesting. That was on Tuesday/Wednesday. We saw the breakout of the 136.00 level for the first time this week, and then we saw the breakout of the 136.200 level, which gave us some positions on the buy side. And we were able to ride the move all the way up into the structure, as the first position closed with about 150, the second position closed about 140, and the third position closed with about 60 pips in profit. So we had roughly close to about 400 pips on the USDJPY before the sell pressure resumed. Now on Tuesday, on Wednesday's live session, we identified the structure here after connecting the series of higher lows with the hopes that price might continue to the upside. So we said this bullish trend line here will guide our trading activity for that day. That was on Wednesday, and we said if a breakdown of that trend line happens, which also shares a confluence with the 137.500 level, would definitely want to be selling at that point. So with a sell stop order below the 137.500, we had our sell stop order triggered at that point, and since then price action rode all the way down into the 136.00 level. And if you remember what we said about the structure on Wednesday, we said that we want to be having our TP target around this area, and that area also will be serving as a buy zone for us whenever we start seeing buy pressure around that area. And we got this area as a result of using our Fibonacci retracement tool after running it through the previous impulse leg here. And we all knew that the bearish momentum we began to see on Wednesday might likely be a retracement of the previous impulse leg, and we were looking for the culmination of that retracement phase somewhere within the 50 and the 78.6% of the previous impulse leg. And with the look of things here in the last couple of days, it appears that this is what is actually happening here. As you can see, price action had continued to find buy pressure within that area, and look at what we have right now. I hope you have a position running here. In fact, I have a simple chart here to further buttress this. So if we scale down to the 30 minutes time frame, I hope you actually took advantage of this opportunity. So this is what I saw here on the 30 minutes time frame last night, and this is the 136.00 level, which was a resistance point at the beginning of the week. And as you can see here, as soon as price got back into the 136.00 level, a level which was broken out of at the beginning of the week, which also triggered our buy position, we begin to see buy pressure resume from that area. And with the situation we have here, price action trading between the 136.450 and the 136.00 area, it is more reasonable to look out for a breakout of this channel to give us a trading opportunity. And what we saw here during the early hours of today was a breakout of the 136.450. In fact, the market gave us quite a lot of opportunity. That is, if you had missed the first, second, third, fourth, fifth position opportunity, you would, in fact, it has been quite a lot of opportunities here as price action continued to retest the 136.450 level. And this also led to another breakout of the 136.750, which also triggered another buy position here. So currently I have two positions running out in this one, and worst case scenario, you definitely have a position running at this particular point in time. So now that we are going into the New York session today, what is going to be our plans on the USDJPY? Well, for me on the USDJPY, I continue to remain bullish on this one as I continue to guide my bullish momentum to the upside on this one. And for those who are taking advantage of this bullish momentum here, well done to you guys for being on standby to have caught that move, and let's see how far this bullish momentum will go. And in order to guide our trading activity for today, we want to see price action continue to trade above the 136.450 for us to feel comfortable in this buy position. And if we look at the previous low here, we have it here, and as you can see, price finds a higher low. And what do you think we do whenever we sight this kind of structure? Well, the next thing we do is to connect the series of higher lows together. I'm not sure the trend line, the line chart here has a good formation to capture the truth behind this higher lows here. So because of this sharp one, so I would like to make this fit into this. So just in case, hold on a second, let me double this trend line. I will double it and make one a major one, and make the other one the temporary one. So let's have it like this. So I have a major one down here, so I'll be giving this a blue color. Let me make it more blue. Then I would give it also a blue color, but make the pixel a little bit lighter than the previous one to give us that temporary outlook on this one. So this is what we have here right now. So price action has been finding higher lows on this chart, so this further confirms or buttresses the fact that we might be seeing a trend continuation to the upside. So I'm looking forward to price continue to the upside, even into the NFP for today. Now, for those who had missed out on this opportunity here at the 136.750, well, I will be advising you to remain patient at this point for the market structure to mature or evolve into a pattern that will be supporting that trend continuation to the upside. And what are the likely things that we can see here that will give us that leverage to add more position or join this USDJPY? Well, I want to see price action probably come back to retest this bullish trend line, which fortunately shares a beautiful confluence with that 136.750 level. As you can see here, it shares a beautiful confluence with it. So if it comes into that structure and we start seeing buy pressure above that level, then this will be an opportunity to join. And if you're already in this trade, it's an opportunity to add more position to your existing trade. However, if price action breaks down the 136.750, we still have a bust up here at the 136.450 area, which also shares a confluence with that major trend line that we have here. So buy pressure above that level will definitely welcome additional position, and if you are not yet in this trade, it will welcome an opportunity to buy. And if a further breakout of the 136.750 from this level happens, we want to be adding more position to our existing trade. So this is what we shall be looking forward to buy the USDJPY for today. So we are going to be using the bullish trend line and the 136.450 as a yardstick for a bullish momentum to the upside. So what this simply means is that if price action continues to trade above the bullish trend line and the 136.450, we are going to be comfortable in our buy position. So we can look out for structures around this area to add more position at its maturity. Now, in as much as we look out for buying opportunity, you know my character here, you know how we do it here. We always tend to keep other options open just in case if price action does the opposite of what we are saying here. We are always prepared to be able to take advantage of that opportunity. So in order not to get caught in a dilemma of not knowing what to do if the contrary happens, we always try to indicate these expectations too as well. Now, the situation here is looking bullish anyways, but if the contrary happens in such a way that we have price action breach both this bullish trend line to the downside, breaking down the trend line and the 136.450 level, this is a sign, this might likely be a sign that we might be having a momentum shift. But remember, we are not having a sell stop order at all in this kind of situation, as we need a confirmation to happen before we want to be joining that decline to the downside. And the confirmation will always come, or is likely going to come, in the form of a retest of structure. It could be the retest of the major bullish trend line here, or the 136.450 area, or it could go as far as retesting the 136.750 area. But the most important thing we want to be seeing is selling pressure below the structures on our lower time frame to give us that confirmation that we want to be joining a decline to the downside. So the only thing we want to be seeing here that will support a sell momentum in this market is price action breaking down the structure to the downside. So this is what I will be looking forward to on the USDJPY for today. I'm open towards a bullish momentum here, but if the contrary happens, we are going to be on standby to catch that move. So on this note, I want to be dropping the curtain, but for the sake of those who are not part of the beginning of the live session today, let's quickly run through all the pairs and instruments we talked about today. So the first commodity we talked about today is the US oil, and on the US oil, this was what we saw and decided to do on the 15 minutes time frame. Okay, so on the 15 minutes time frame, we were able to identify a structure. So price action has been bearish since the beginning of the week. We have been lucky enough to be part of some of these positions here. But what we saw here on the lower time frame is quite interesting, as we saw how indecisive price action appears to be at this point. And in that regard, we have a structure here where price action is ranging within the $75.35 level and the $75 area that we have here. Now, you must have had your buy position triggered at this point. Remember, your stop loss should be right below the structure, and I'm still of the opinion that a bullish momentum is still very likely in this current market. So let's see how price action plays out from here, and I wish you best of luck on this one. Then we went on to talk about the US tech for today, and on the US tech, we saw some bearish momentum happen in the last 24 hours here, as price action now is trading at around the $12,000 area. And I showed you how important the $12,000 area has been in terms of selling pressure. And I said if the continued rejection of the $12,000 happens here, we'll have no choice than to look out for selling opportunity. And to further help us identify an opportunity here, we scale down to the much lower time frame, that is the 15 minutes time frame, and this is what we were able to identify here. So we said we are going to be using this bullish trend line as a yardstick for trading activity. That is, if the bullish trend line is breached to the downside, we want to be seeing this as a momentum shift and a trend continuation to the downside. Now, in order to buttress the breakdown of that bullish trend line, we have a structure here at 11,980, and I told you that what we want to be seeing here is a breakdown of the 1,980, selling pressure below the structure on our lower time frame before joining that decline to the downside. And a further breakdown of the $11,925 level will definitely welcome additional position to our existing trade. Now, in contrary to this bearish expectation in this market, I have said If it anyway happens that price action breaks above the $12,000 area to the upside, this might likely be inciting another bullish momentum here, but we are not joining unless price action breaks out of that bearish trend line that has been guiding that bearish momentum since the beginning of the week. So a breakout of that trend line is what we shall be looking forward to buy the US tech for today. So I went on to talk about the GBPUSD, and on the GBPUSD we were quite profitable on GBPUSD as we have been selling at the beginning of the week and we have been buying during the later part of the week, and right now we had our TP target at the 1.20 level triggered, and we closed our position there. Now, I told you that considering the selling momentum in this market and considering the significant breakdown of the 1.200 level here, I am of the opinion that we might likely see some selling pressure resume around this area to give us a retest of structure to incite another wave to the downside. And from the look of things here, we still don't have a structure here to guide trading activity as we continue to monitor price action. So I told you that I want to be seeing some reversal pattern, probably selling pressure below the 1.200 level to give me a clue into a potential selling opportunity. And when we scale down to the 15 minutes time frame, things wasn't really that clear enough here too as well. But one thing I said here is that I want to see some lower lows and lower highs to give me a confirmation to join that decline to the downside. So let's be on standby for this. Let's look out for lower lows and lower highs, and it appears a lower low is already forming in here as price action appear to have broken, making attempts to break down the 1.19750 level. So let's see how this is going to be playing out. So I want to be seeing some lower lows, lower highs for me to be joining that decline to the downside at this point. However, if price action breaks out of the 1.20 level, then a bullish momentum might continue to the upside, which I would not be part of anyways, as I will be done for the week on that one. So I went on to talk about the XAUUSD, which has been profitable for us so far this week too as well. We were able to join this bearish momentum to the downside, which gave us over 5,000 pips on multiple entries. And then we also were also part of this reversal pattern here that broke out of the neckline at the $1,820 level. And we have secured the current buy position, as I told you to be moving your stop loss to somewhere around the $1,828 level. Secure this current position as we continue to monitor price action. And one thing we also laid emphasis on here is the fact that as soon as price got into this area around the 1,835, we have been seeing some selling pressure around that area, which is a clue that the bullish momentum that started yesterday is thinning out at this particular point in time. And to further buttress the selling momentum around this area, when we zoom out to look at what has been happening here since the beginning of the week, you can see that we have a bearish trend line after connecting the series of lower highs. And as you can see, what we have here, price appears to be trading right around that bearish trend line, and we have been witnessing some sharp rejection of that trend line in the last 4 hours. So with the citation of the sell pressure that we have been witnessing here in the last 4 hours, I have said that we are going to be looking forward to selling opportunities below the $1,831.50 level. Look out for selling pressure below the structure on our lower time frame, after which we can join that decline to the downside. Then a further breakdown of the $1,826 level will definitely welcome additional position to our existing trade. And I told you that the TP target for the current buy position that is running right now falls at around the 1,839. So I'm hoping that price action will hit our TP target before it starts the bearish momentum. But if a breakout retest of the 1,839 happens, then this will be an opportunity to continue to buy the XAUUSD as we close the week. Then I went on to talk about the USDJPY, where we bought at the beginning of the week, then we sold again during the midweek. We had our TP target hit for the sell position here, and in the last 12 hours we have been witnessing some buy pressure coming in at the 136.00 level. And I showed you a simple setup here on the 30 minutes time frame which guided the current bullish position here, and I've told you that this is what we shall be using to guide trading activity for today. So we have 3 structures which we shall be using. The first one is this major bullish trend line after connecting the series of higher lows here. Then we have the temporary bullish trend line here. So what I'm simply saying is that if price action continues to trade above both this major bullish trend line and the 136.450 level, we feel comfortable in our buy position. So I told you I have 2 positions running right now, and for those who had missed out on this opportunity, there is still a tendency that price action could still come back to retest the 136.750, which shares a confluence with that temporary bullish trend line to incite another wave of bullish momentum. That is one scenario there, and we could have a situation where price could drop further into the bullish trend, the major bullish trend line here, which also shares a confluence with the 136.450 area, where the appearance of buy pressure on our lower time frame will definitely welcome additional position at this point. So let's be on standby for all these buy positions in case price action drops that far. Now, I told you that in as much as we look out for buying opportunities here, we should not ignore the possibility that sellers could come in this market. And considering the fact that it has been bearish in the last 48 hours, a breach of this bullish trend line will be a beautiful signal for us to get prepared to sell. And I told you that we are not getting too excited at the sight of the breakdown of that structure, as we need further confirmations to happen, which is likely going to be coming in the form of a retest of structure. It could be the retest of the 136.450 or the bullish trend line, or it could go as far as retesting the 136.750. But most importantly, what we want to be seeing is a selling pressure, like a reversal pattern below the structure, to join that decline to the downside. So this is what we shall be looking at on the USDJPY for today, and I hope that we'll be on standby to catch these opportunities. Remember, today is the NFP, and we want to ensure that we secure all our running position by moving our stop loss accordingly, and to secure this position at your desired target, or probably the suggested levels I laid emphasis on during the session. And on this note, I want to be calling it a day. It has been a wonderful moment with you guys, and I have high hopes that we are going to be eating it big prior to the NFP or post the NFP today, because the structures here are supporting a potential massive move to either way price action will be going. So let's be on standby, everyone, so that we can catch these opportunities. And I hope you've screenshotted my screen so that you can use it as a reference point when you're about to make your individual decision. So on this note, I want to be wishing you best of luck, and do have a wonderful, beautiful weekend. And I look forward to seeing you same time on Monday, 10 a.m. UTC, 11 a.m. West African time, as we come here again to review, to start the week on a fresh new look with new financial instruments, and get prepared for the New York session on that day as well. Do have a wonderful evening, everyone. I can see your comment, another profit there. I like calling that name because I want it to manifest. All right, guys, do have a wonderful and beautiful day. Bye-bye.